Futures, as we mentioned, moving lower this morning after results from the big three banks underwhelmed investors. So what do the results signal for the broader markets and the economy? Let's bring in JJ Kinahan, who is the IG North America CEO, to help answer that question. JJ, great to have you here in studio with us. I'll jump over to the set in a hot second, I promise. But we got to know, as you get these prints that come out over the course of this week and we begin a new trading or a new earnings season, what is the theme that could prevail as we hear more about what CEOs are saying about the macroeconomic backdrop, whether that be in travel like Delta or whether that be in banks like we've seen with JPMorgan, Wells Fargo, and Citi this morning?
Yeah, I think that this is, every earnings season, of course, what the CEOs say is probably one of the more important factors. But a lot of times you're looking at the earnings themselves. What we're looking at this time, though, and I think if you think about JPMorgan's earnings this morning, one of the reasons that the stock fell after the earnings came out is some of the statements that were around it. Mr. Dimon talking about the fact that there were a lot of factors that I'll say were out of their control that could affect things, that they had to, I'm paraphrasing, of course, but they had to prepare for a large variety of outcomes. That's not something you normally hear. You normally hear we're going to stay with this plan, et cetera. So I think there's so much going on in the macroeconomic environment. You guys just had a really smart discussion about interest rates. The interest rate environment has really been the most confusing. It's what's been driving the markets. You guys talk about it, every day because it is such so newsworthy. You look at just looking at June and September right now. If I look at the CME Fed Watch tool and see what's happening in terms of expectations. Mm-hmm. The expectation of a June rate cut is now down to about 23%. What's more interesting to me is I look out at September, we have about a 76% probability of a rate cut. But having a 50 basis rate cut and staying exactly the same as we are now is the same probabilities. To me, that's really incredible considering we're saying that June has such low probabilities overall. So again, I think that's why the market is struggling a little bit here in terms of trying to figure out what this actually means.
So what do you think is likely going to be the action going forward if we in fact maybe don't get any rate cuts this year? Will we see more pressure on the markets, or will we see maybe the sell-off that we saw earlier this week really just be a blip in terms of some of that longer-term momentum then to the upside?
If we don't do anything on rates, I actually think we have a nice opportunity to stay in a trading range. The one area that I worry about if this happens is going to be, of course, the Magnificent Seven, because I think that, that's down to a magnificent 2 or 3 at the moment, perhaps. But again, will they be able to hold this support as we go higher? And as I said, the Magnificent Seven, I both saw you look at each other. So
it's practically clearly the final four now,
exactly.
But you mentioned it might just be down to 1 or 2. I guess what are one of the 2 names that you think would be able to weather a higher for longer environment better than the others?
I think that the 2 that really stand out to me are Microsoft. It's interesting. I look at even our clients' behavior, through Tasty Trade, and that is Microsoft is always just a perennial favorite no matter what is going on. They are such a strong franchise overall. They've, as you all know, they've been incredible in AI, et cetera. And the other one is Amazon. And the reason I say Amazon primarily is just because if you think, I think we tend to underestimate how many businesses they're actually in. Mm-hmm. And one of their businesses seems to me is always doing well.
When you think about how investors are trying to position themselves best in a no rate cut 2024 perhaps, what is the top trade that you see emerging right now? And is it more piling into some of the overcrowded trades that we've seen, or is there some divergence that's starting to emerge?
No, you see a little bit of a divergence. So one thing to keep in mind with retail investors, when the market sells off, they tend to trade a lot more indices and index-related ETFs, SPY, QQQ. When we see the market start to rally or continue to rally is when you start to see more divergence. And in the last few weeks, what's been really interesting to me, the stock that's been most bullish over the last week has actually been GE. And, talk about going old school.
That's one of your top picks right now, too.
Yeah, old school with the new business, if you will. And so that one has been really interesting to me to see as the top, most bullish one. The other 2 that kind of stand out are Newmont Mining, mm-hmm. obviously related to gold, mm-hmm. and then we see Meta as a 3rd one. So I didn't mention that as one of the Magnificent Seven. I just think that's a stock that, they came out earlier this week. They had a couple of really big upgrades, and they talked about some of the more controls, I guess you'd say, for teenagers online, and I think that resonates with a lot of parents.
And just lastly, while we have you, is GE just the thesis that they've finally been able to split up and kind of make sure that they can delineate between the financial and kind of grouping together electric versus, power, renewable energy, GE Digital, energy, financial, and whatnot, and separate those?
Yeah, and you see GE Healthcare actually doing well also. So
Right.
this is one where the parts were much greater than the sum,
Yeah.
it seems.
All right. JJ Kinahan,
Thanks
IG
for having
North
me, guys.
America CEO. Great to see you. Thanks for joining us.